Well, greetings. It is Friday. Thank God it's Friday. Man, it's been a crazy week. Hopefully, everyone's having a fantastic evening or morning, depending on where you are. Oh, man, we got a lot to cover. I'll just start off, though, real quick with the scary reverse carry trade with Japan. I mean, everyone was like, hey, the market's going to drop 20, 30%. Well, it's coming, it's gone. It did not happen. Look, guys, a lot of this was baked in. We've been talking about this on the show for quite a while now. It's not a surprise. This is something, the reverse carry trade, something I've been talking about for the last year and a half. We've seen it unwinding a couple of times. This time, of course, was different. They gave us a heads up, right? And a lot of this, I think, was baked in. There was about a 98% chance as of a couple of days ago that they were going to hike rates. Obviously, the markets have they pumped a little bit, I guess. I mean, it's a green day. We'll take a green day, even if it's like 1 or 2%, given everything that we've experienced this year, especially recently since October 10th. Oh man, it's been pretty tough out there, guys. Not gonna lie. But with that out of the way, there's some things I want to talk about. I want to talk about the debt that's coming due next year. It's a big topic. You're going to see more and more of this as we move into January. We actually have about $10 trillion of debt that's rolling over next year. It's a big number for sure, but is it being a little overblown? I want to talk about we might actually have more demand than we need, and some of the moves we're making to actually push rates down because of that. So pretty crazy stuff there. Crypto actually has a play in all of that. So for all the people that hate crypto, hey man, it's actually going to be very important for the health of the US dollar moving forward. Let's see here. We're also going to talk about the next Fed chair. There's another dark horse candidate I want to break down, show you guys what we're looking at there. Talk about liquidity entering markets. There's liquidity entering from a lot of different angles right now, which is very exciting. We're going to talk about the CPI report that came in and whether or not it should be trusted. And the last thing we'll talk about on the macro side before we get into crypto is what can we expect if the Supreme Court shoots down Trump's tariffs? Because there's a real chance that does happen, and pretty soon here, actually. So I want to talk about the implications there, how that could play out. On the crypto side of things, we have a new CFTC chair. It's very good for crypto. We also lost a huge advocate who is not running for re-election, so that's unfortunate. And we've got a lot of differing opinions on the 4-year market cycle. Nothing new there. We'll find out who is right pretty soon when it comes to the 4-year market cycle and how that plays out. And of course, we'll get into some deep in updates for you guys. So if you all are watching on X, make sure to like, retweet, follow me if you don't already. Make sure to subscribe to my YouTube channel as well if you don't already. Appreciate you all for joining me on a Friday of all days. I know everyone's probably pretty busy out there, so share because it is recorded. People need to be aware of this stuff. All right, let's talk about the national debt. So we have about a third of our debt, roughly $30 trillion is our total debt. We have $10 trillion maturing next year. There's a lot of people that are kind of doom and gloom talking about, oh, we're not going to have enough buyers, etc. So I want to break down what this kind of looks like, break down the numbers a little bit. The main buyers are money market funds. I have that highlighted in a different color for a reason, because we're going to touch on that in a minute. You have fixed income investors, foreign countries, insurance companies, individuals, and corporations. And we got a couple new buyers too I'm going to be talking about. But if you look at this chart, I mean, it is pretty daunting, actually. You see 34% of our debt is coming due in 2026. It's a lot. And you look at the outlier years here, the longer term debt becoming less and less of a factor. We're rolling a lot more into the short term side of the debt. That means we have to have regular buyers, y'all. Okay. Well, one of the buyers I just mentioned is money markets. So money markets largely position themselves in Treasury, short-term T-bills. So a Treasury bill is anything of a year or less duration. And you'll see here, there's about $7.5 trillion sitting in money markets right now. the vast majority of that, very, very large percentage of that, is going to be a regular buyer. That means if they're holding T-bills, that means they're going to be re-upping, rolling those over on an annual basis. You'll see even in years where we had a dip, maybe we cut rates a bunch and these weren't yielding as well. They still levelized out. It wasn't a big dip, but we've seen a large increase overall. And I would expect with where rates are right now at, on the short term, 3.5% or so, I don't think we're going to see money flowing out of these anytime soon. So this is already a huge percentage of what needs to be rolled over on an annual basis. These are regular buyers of our debt. The other thing they mentioned was foreign investors, right? So there's been a lot of talk throughout the year about how governments are selling our debt. No one wants to hold our treasuries. I would say that's true for China specifically. So let me see if I can move this a little bit closer here. So China specifically, they have been selling our treasuries a bit. So down to 688 billion. If you look back a year ago, they're at 760 billion. So indeed, they have dropped off about $100 billion worth of our treasuries. So they've been dumping our debt a bit. They still hold a lot. The UK, though, in the second line right here, they've become the second largest holder of our debt. And they've actually more than offset the decrease from China. So a year ago, they were holding 746 billion. The UK is now holding $878 billion. So again, they've offset the dumping from China. And then at the top, you have Japan. Japan is the largest holder. They've actually increased their holdings by $100 billion over the last year. So the whole notion that foreign entities are not wanting to buy up our debt is actually very false. So yet another buyer, and a growing buyer at that. But there's a couple of new entrants into the T-bill space, namely stablecoin issuers. And this is a big reason why they wanted to pass that Genius Act so badly, because stablecoin issuers have to hold, T-bills generally is the vast majority of what they hold as they issue stablecoins. So when you see USDC printed $500 million this week, on the back end, they're pretty much, in most cases, buying T-bills to back those US dollars they're putting on chain. That's how these stablecoin issuers get their yield, is by holding treasuries. If you look at 2026 to 2028, they're expecting that this is going to grow from $300 billion a year to $1.6 trillion. Okay, so this is newfound purchasers of T-bills. If you look a little bit further out to 2030, it's expected to get to as much as $4 trillion. This is such an understated situation. I don't know why people aren't paying attention to this. I mean, $4 trillion is massive. That's more than all of those top foreign entities that I was just talking about combined. That's more than China, Japan, and the UK combined as treasury purchasers of our debt. So this is a huge, huge deal. The other thing that's coming up is deregulation in the banking sector. So there's something called the SLR, the supplemental leverage ratio, and it determines how many treasuries banks can hold. And for a long time, they were actually deterred from holding more treasuries. The treasuries were actually treated the same as pretty much all holdings on their balance sheet. They're changing that law. So this is actually going to change as of January 1st, enabling our banks and those institutions to hold more treasuries. It's estimated that combined, this rule change could add up to approximately $3 trillion in additional treasury purchases per year. It's not going to get there overnight. This is going to be something that ramps up. But you start doing the math here. You got $3 trillion here. Stablecoin issuers over the coming years are going to be up to $4 trillion. You've got foreign entities still increasing their buying. You've got the money markets, right? It gets to a point where actually we have more purchases of our T-bills than we actually need, right? We have excess demand. And that's why this is what you're seeing. And you may or may not have been seeing these posts, but I think a lot of people are like looking at this as QE. And they're like, the US Treasury stepped in and is repurchasing $2 billion of its own debt. This week, they've repurchased $6 billion. Now, this is not to be confused with what we just saw out of the last FOMC meeting, where they announced that they're going to start buying. They have started buying T-bills. This is completely separate. If you look at the maturity date range on this, these are long-term duration bonds. We're buying back early and we're rolling those into T-bills. So we're essentially, you can look at it like, taking your mortgage and rolling it into a credit card, if you will. The difference, though, is that in this case, the short-term yield or the interest payments we have to make on that short-term debt is far less. So by moving more and more debt to the short-term T-bills, we're paying, 3.5%? Okay, so then the 10-year at 4%, then the 30-year at 4.8%. Okay, it's a lot more attractive to push our debt onto shorter term rates at 3.5%. Doesn't sound like a lot, a difference of 1.3% if you're comparing the 30-year to the 1 year. When you're talking about trillions of dollars, that adds up in a big way. So we have plenty of buying actually for all the debt we're rolling over. We actually have more than we need, to the extent that we're buying back longer term debt and moving it into the shorter term debt time frame. So we're bringing down those interest costs. On the other end too, by buying the longer term debt back sooner, and we're creating demand on those longer term duration bonds, that should in theory start pushing yields down there as well, which is great. That's what most people are asking for, right? The Fed can lower rates, but just because the Fed lowers rates doesn't mean the longer term duration yields are going to come down. You see a much more drastic impact on the T-bills, the short term, 1 year especially. When you look out to 20, 30 year, even the 10-year, they don't have as much control over that. I mean, this new demand of them buying back that debt early is going to help for sure. Now, this is the big deal, because if we can push more and more debt to the short term and the Fed keeps dropping rates, we can save a lot here. So right now, we're spending about $7 trillion a year. We bring about $5 trillion in tax revenue in. So we're running about a $2 trillion a year deficit. $1 trillion of that is interest payments because interest rates have gone up. So the more we can push that down, the more we can save on the interest payments, the more we can decrease that deficit. Okay. And you start adding in things, if the tariffs stick, that can bring that down further. So you see what's happening here. The stablecoin bill was so incredibly important. The SLR changes and the deregulation that's coming in January, we're starting to really take care of our debt. And when you pull it all together, it makes a lot of sense. The other thing I want to talk about, though, is the liquidity moving into markets. So this was announced earlier this month. They talk about these RMPs. They're not calling it quantitative easing. Okay. And traditionally, quantitative easing is, it happens when rates are near zero. Okay. When the Fed has already lowered rates, and it generally is printing money to buy longer term duration bonds. Okay. And that's traditionally how it's worked. That started back with, Helicopter Ben after the Great Recession back in 2008, 2009. And the whole purpose of that was, to print money by buying long-term duration bonds. You're pushing yields down, right? They lowered rates so much that flooded the market with capital, and then they were forced to basically put money into risky assets. Well, they're doing quantitative easing, but just on the short-term duration. They're not going out and buying the 30-year and the 20-year with this. They're buying T-bills. And they've announced they're buying $40 billion a month. Now, to put this into, to put this into a comparison to like 2008, 2009, at that point, they were doing like $80 billion a month in purchases. So $40 billion is not a small sum, guys, at all. And here's what we're looking at. I mean, they have the schedule they've released. So this started on December 12th. They bought $8.16 billion. On the 15th, $6.8 billion. And you see, more on the 17th. They did more today, $8.16 billion today. In a few days, they're going to do another $6.8 billion. This is a lot of liquidity that they're going to be entering into the market. It's not just there, though. This is essentially the checking account for the Treasury. It's called the general account. And the balance builds up, from time to time. This happened when we had the government shutdown. It built up quite a bit to about $958 billion. Let me zoom in on this so we can see it a little bit easier. So it got up to about $958 billion. Just over the last few weeks, this thing has dropped $100 billion. So they've essentially more than that, $120 billion. So there's another $120 billion that they have of liquidity they've pushed into markets. And the other thing I want to talk about here is the overnight repo market. This is short-term lending to our banks when they have cash crunches. Now, this isn't necessarily QE because what they're doing here is, the Fed is agreeing to purchase their treasuries to get cash, inject cash into the banking system. But the banks are then agreeing to, hey, we're going to buy those back. So this is just a short-term fix. But when you start to see a trend like this, it starts to become, pseudo stealth QE in a sense. Okay. And it's happened just as recently as December 15th, just on Monday, another $5.2 billion was entered into the market. It's worth bringing up too, because the last time we started seeing this trend where the repo market started having a cash crunch, our banking system, well, this is right before we started a massive QE back right around COVID. So something we could see again potentially, but again, they're already doing it here with the T-bills. They're just not buying the long-term duration. Now, they are buying some of it back and rolling that into short-term debt, but this is, actual liquidity injections into the economy. So, guys, liquidity's coming. The debt situation next year, what they're doing with the SLR, with deregulation of the banking, what they're doing with the stablecoin issuers. I do think that liquidity is going to be restored. And I think that is very good for markets. Obviously, October 10th is still something we're working through, but there is a lot of good things, especially when you look at the business cycle, right? Liquidity drives it all. Now, the other thing I want to talk about here is the CPI report that came out. And there's this article here. It says the report was distorted by missing data, which is absolutely true. So if you look here, it says CPI index was at 2.7% on an annual basis, much lower than what was projected at 3.1%. You'd think everyone would be like, oh my God, it's amazing. Well, economists cautioned against reading too much into what some dubbed as a Swiss cheese report. It says the government shutdown, of course, prevented the BLS from publishing month-to-month changes for November CPI, as most of the price data for October was not collected, creating big gaps that economists said made the report less reliable than normal. You even have Jerome Powell last week saying, hey, we're going to look at the delayed economic data carefully and with a somewhat skeptical eye, given the disruptions to collect during the shutdown. Guys, the markets are pretty smart, generally speaking. You look at the prediction markets here, you can see very quickly what the markets thought of this report. So, generally speaking, you would think if the CPI came in looking that good, the case for a rate cut would be much higher, especially with what we're seeing with some of the job numbers that are coming in, right? Well, we saw a slight tick up, but overall, the markets largely didn't react. In fact, you're seeing the no change now has ticked up 4%. In other words, prediction markets are kind of calling BS on the CPI report. That's not a shock, okay? And that's why it's important to look at these prediction markets, man. They are so important. If you're just looking at X all day, a lot of the news that's being reported on there and people are pushing for, clickbait, it's already baked in. The prediction markets kind of give you a good view of what's baked in at this point. It's one of the reasons why with Japan reverse carry trade, I was like, guys, this has already been baked in. Like we already covered the reports like a month ago, and we'd already seen sell-offs leading up to it. But again, markets aren't buying the CPI report. But what can we expect moving forward? Well, let's look at the race of the Fed chair, because this is going to be incredibly important for our bags next year. I covered in great detail Hassett and Kevin Warsh. Back when Kevin Warsh had jumped up to a 54%, I was like, no way this guy's going to win. And I broke down the reasons why. He likes CBDCs. He's not going to cut rates aggressively like Trump wants, right? It was very obvious. At that point, I should have put a bet on there for no. That was pretty easy money, in my opinion. Kevin Hassett's in the lead. And I think for our bags, that's who we want the most. He's very pro-crypto. He's a crypto owner himself. He's made it very clear he's going to aggressively cut rates if he gets put in this position. That said, there has been a little bit of pushback, I would say. There's reports that people high up in the White House are saying that he shouldn't be the one to be put in that position. Trump's made some statements also about how he wants to have control over rate cuts. So there is a little bit of drama around Hassett, but there is a dark horse candidate, and that is Christopher Waller. And I do want to talk about what that could mean if Waller is the selection. I would call him the dark horse right now, and it wouldn't be unheard of for Trump to throw a curveball at the last minute. By the way, we are expecting that we'll have a decision here, likely in January, I would say February at the latest, on who the next Fed chair is going to be. And markets, I would expect, will react to this news. I think Hassett would be very good, obviously. Warsh, I think, is out of the running. But what about Mr. Waller? So Mr. Waller had a strong interview. Let me see if I can reload this and get my... Here we go. Mr. Waller did have an interview. He had a strong... It was being characterized as a strong interview with President Trump. And here's what Trump had to say about it. I think he's great. I mean, he's been a man who's been there a long time, somebody that I was very involved with. In fact, Trump nominated him as Fed governor back in 2019. So they do have a little bit of a history there. It says in an interview on Wednesday with CNBC, Waller said he believed rates could decline by 50 to 100 basis points. So he's out there. He knows what Trump wants to hear. So it sounds like very much like Hassett. He would be in favor of cutting rates. So that obviously would bode well. But what about crypto? What about that side of things? Let me see if this audio comes through. You have to let me know.
This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector.
So, in other words, he has made statements like, hey, crypto has become a major part of our financial system. Okay, so I would say he is in support of crypto, unlike Warsh, okay, he was actually for CBDCs. That's not who we want, right? I think Waller actually is likely to cut rates. I think he is willing to embrace crypto. That said, I don't think he owns crypto himself. That's okay, though. It's okay. We don't need him to actually own crypto. But if I were to say the best candidate for the bags for 2026, who do I think would be best for us and for our bags? I think Hassett's the best option to pump the crypto markets. I think Warsh is by far the worst. And I think Waller is somewhere in between. I don't think Waller would be do a ton of damage. I think overall it'd be a net positive. But again, Hassett currently is in the lead. Something to keep an eye on for sure. Let's hope that Warsh continues to drop, because I believe he would not be good for our bags, guys. I'll be frank about that. Right. What about this? So there's some big news. Trump's tariffs. We're likely to find out any day now whether or not the Supreme Court rules against Trump's tariffs. Now, there's a lot of implications here, but the thing that I think we care about the most is, what's it going to do to our bags? So it says here, if Trump's tariffs are ruled down, the crypto market, particularly Bitcoin and major altcoins, would likely see a positive short-term reaction with potential rallies in prices. It says based on 2025 precedents, crypto would probably outperform traditional equities in the immediate aftermath, with Bitcoin potentially testing higher levels amid reduced macro headwinds. The exact magnitude would depend on the ruling's details, and this is key: any appeals, refunds, and concurrent policy signals. Okay, and I say that's key because the way I see this playing out is that they're not going to just let this thing go. There are ways that Trump can fight this, and there are potential workarounds. I think if they rule against his tariffs, they're going to look at other avenues, and says that there are other trade laws they can move to. Section 232 or Section 301. So there are other ways they can pivot. And I believe that they are going to fight this thing if it's ruled not in there, if it's ruled against Trump and what he wants. So to me, that's bad. Okay, that's more uncertainty, and we don't need any more uncertainty. So I hope that they don't rule against them right now, because this is how I see it playing out. We should know. Again, I looked it up. It says that it could be any day. Certainly within the next few weeks, we should know for sure what the ruling is on the tariffs. I think that we talked about this in the happy hour last night. I do think that part of him issuing the $1,776 checks to the military, I think that's to put pressure potentially, because I believe, or at least they're saying, it's coming out of the tariff funds. There's some different reports on that, but I believe that might have been somewhat of a setup. Knowing Trump, I wouldn't be surprised. Wouldn't be surprised at all. Oh, well, that's what I got on the macro side of things, guys. I want to talk about crypto, though. We've got a lot of different viewpoints right now on whether or not the 4-year market cycle is alive or dead. This is from Grayscale. So in its 2026 digital asset outlook, the firm predicts the end of the so-called 4-year cycle and anticipates Bitcoin will hit new all-time highs in the first half of 2026. So the report focuses on two main forces behind this acceleration: the rising demand for monetary alternatives amid fiat currency concerns and bipartisan legislative clarity in the United States, especially following the Genius Act. Of course, that's the stablecoin act I was talking about earlier, and potential passage of broader crypto market structure laws. I'll talk more about that in a minute. So Grayscale is on one end of the spectrum. Okay, they believe we have brighter times ahead. However, this guy, Mr. Timmer, director of global macro at Fidelity and a longtime Bitcoin bull, has recently turned bearish. So he said the October all-time high near 125,000 reached after roughly 145 months of cumulative rallying fits well within the framework. Bitcoin bear markets, often referred to as winters, typically last about a year, Timmer says. As a result, he sees 2026 as a potential year off for Bitcoin following the conclusion of the latest halving-driven cycle. He says, while I remain a secular bull on Bitcoin, my concern is that Bitcoin may well have ended another 4-year cycle halving phase, both in price and time. Well, Timmer, we don't care what you think. We don't want your negative thoughts. Take that on somewhere else, sir. So, main thing there, guys. Everyone's conflicted right now. It depends on who you talk to. I think we're seeing more and more people turn bearish. To me, that makes me more and more bullish. Generally, when everyone thinks it's one way, it ends up being the other way. So we'll see how it plays out. We'll know soon how it plays out. I'm in the belief that as liquidity is restored and the market cycle and the business cycle expands next year, which is what I'm expecting, especially with the midterms coming up, I think Trump's going to pull out all the stops to push up markets. I think we're going to have a resurgence. I hope I'm right. I think October 10th was a black swan event nobody could have predicted, that has put us through a lot more pain, and we'd be in a much different place right now if it had not happened. Let's look at some other news. Robinhood added 500 tokenized stocks overnight on Arbitrum, of all things. It says Robinhood's platform has a total of nearly 2,000 assets tokenized as of Thursday. They added 500 of them overnight. There's some tweets here. It says this Arbitrum content creator spotted on X that Robinhood deployed these new tokenized stocks. And the CEO, Vlad of Robinhood, responded. He said, slowly, then all at once, so as you see here. So that's pretty bullish, pretty exciting. See stocks on Robinhood being tokenized. Pretty wild stuff there. JP Morgan, they're moving their stable coin over to Base. So it says the move from a private chain to Coinbase's base layer is driven by demand from institutions, JP Morgan said. Typically, JPM coin can be used on Base as a means to either keep collateral or make margin payments for transactions related to crypto purchases. So another big entity announcing. How about this? Visa using Solana. Visa announced it is launching USDC settlement in the United States, allowing U.S. issuer and acquire partners to settle certain VisaNet obligations using Circle's USDC. So Visa named Cross River Bank and Lead Bank as initial participants, settling in USDC over the Solana, this key Solana blockchain there, with broader U.S. availability planned throughout 2026. Like, guys, everything is lining up and everyone's so bearish. It's kind of wild to me. Pretty wild. This is some huge news here. So the U.S. Senate on Thursday confirmed Michael Seelig as chairman of the Commodity Futures Trading Commission, so the CFTC. Says his approval follows a closely watched Senate Committee on Agriculture hearing earlier this month, in which he outlined a deregulatory crypto-forward vision for the agency, while deflecting repeated questions about whether the CFTC has the resources to manage an expanded mandate. As appearing before the committee, Seelig argued that the CFTC is the right and only regulator for spot digital commodity trading and urged Congress to move quickly on market structure legislation. Love that. He described the digital assets market's evolution from a niche experiment to a nearly $4 trillion ecosystem as a turning point that demands clear rules and regulatory certainty. I agree. We had Caroline Pham in there previously. She said she intended to step down after Seelig's confirmation. Sounds like she accepted a job as the chief legal officer over at MoonPay. So I'm sure she's getting paid. Good for you, Caroline. Well, we gained him. We gained Mr. Seelig, but we lost Cynthia Lummis. She announced that she's not rerunning for re-election. So she's been really a huge advocate for crypto, for getting legislation through for the strategic Bitcoin reserve. So definitely sad to see her not rerun. She basically said, I think she's like 71 years old. She's like, it was arduous. It was like very taxing this last year. I believe it. I mean, she's been all over the place, really pushing crypto, huge advocate. So pretty big bummer to see Cynthia Lummis leave, but we thank her for all of her hard work for the crypto space. She's really done a lot to push things forward. Let's talk about the Clarity Act. Thought I had some highlights in here. Let me see if I can reload the page if they come up. Sometimes you just got to do that. There it is. Speaking of the Clarity Act, and this is what a lot of people are waiting for. I think that if we get regulatory clarity and we get this bill passed, it's not going to cut down on all the market manipulation, guys. Like that's, I talked to Tyler about that. But I think it can help. I think it will cut down on a substantial amount at least. And it's also going to help bring in a lot of sideline capital. People are waiting, right? They want to know what's classified as a security, what's classified as a commodity. What should they be investing in, right? Says White House AI and crypto czar David Sachs said on Thursday that the markup for the Clarity Act, the landmark crypto market structure bill, is confirmed for January. We are closer than ever to passing the landmark crypto market structure legislation that President Trump has called for. I hope that's right, man, because there's some rumors out there that this could be thrown into the whole midterm conversation and that this thing might not get passed. We really want to get this thing passed soon. January is what they're shooting for. I certainly hope so. It would have been done if it weren't for the government shutdown, I think, by now. But this is where we are. And this is a really, really important bill. And if this thing gets pushed out, it might not get done. Now, if you look at Kalshi right now, the chance of it getting done in before 2027 is 77%. So I like those odds for sure. But I want to see it get to 100% because it's super important. And I don't want it to be, one of those things that becomes a pawn in the midterms. That's the opposite of what we want, guys. All right. Let's talk about Bitcoin. Bitcoin's sitting at just under 88,000. It's been disgusting. It's been just this disgusting chop. Doesn't matter what type of good news comes around. It's being pinned down, frankly. I might get on for a live stream tomorrow. I'm heading back to St. Louis. There's a thread that Tyler sent me about how Bitcoin's price has been kind of pinned down and why over the next week or two, we can see a lot of that sell pressure that's kind of been pinning the price down get alleviated, and why we could see some major price appreciation after that's all gone. So I want to break that down a little bit in more detail. But for now, guys, I mean, it's kind of just touching grass time, because unless we break back above 94,000, that's really the critical level right now. We're not going to break back into an uptrend. That's what we really have to see. So I'm just kind of wading through this chop. It sucks. It's boring. Not as fun as it was last year, I'll tell you that much. And we're not far off from where we were a year ago, which is what freaking crazy. I mean, obviously, when you look at altcoins, they're way down. But look at this. Look at this on a day where we have everything green. It's been so long since we've seen something like this. I mean, if we click on the hour, not as good. But daily, love it. Man, we need more of these days. We really do. Because still on the week, it's down. On the month, it's disgusting. On the year, it is absolutely brutal. We got Zcash in here. I mean, that's about it. Look at some of these numbers. It's pretty ugly. I was looking through this earlier. Ondo down 77%. AVAX down 68%. Render down 82%. That's fucked, man. Like, this is really bad. And that's why like everyone's like, well, Bitcoin's still sitting at $88,000. It's like, yeah, but people got wrecked in alts this year, man. It's been absolutely brutal. And things were starting to recover until, well, of course, October 10th. And as I mentioned, more and more big accounts are starting to really capture what happened on October 10th. I put a video out about this a few weeks ago, obviously covered it in real time when it was taking place. It was like, this doesn't seem right. Kind of pulled everything together, realized it was the Binance pricing issue. Wintermute got blown up. Kind of created this whole story of, okay, now we kind of know what happened, but I think we're still recovering from that. But Raoul Pal is the most recent one to kind of break down what happened. So you reminds him of the flash crash, equity flash crash in 2010, and how there was forced selling, from some of these market makers to de-risk. So I don't think it's a secret anymore. This week, especially for whatever reason, people are starting to kind of understand like what happened. Of course, this is a video I put out like 3 weeks ago. It's gotten a lot of play this week, actually. I've been kind of sharing on X, but I think going into this week, I had like 400 views. So this thing is certainly getting a lot of views. But the main story here, guys, is like, it's going to be a while. We are coming off of the largest liquidation event in crypto history, 9 times worse than anything we've ever seen. Man, like, we're way worse than FTX. This is horrible. And some market makers absolutely got blown up. And I think we are seeing forced selling. And I think it's had a major impact on markets. And it sucks. It really sucks. But those are the black swan events, and let that be a lesson for all of us. I think the rest of Trump's presidency, I don't know if we'll see another black swan like that. Maybe, you never know. But what have we seen this year? Volatility. The guy can send out a tweet and crash markets 20, 30%, right? We haven't had a lot of opportunities to take money off the table. We haven't had a lot of pumps. They will come again. But let that be a lesson for all of us. When we see greed in the markets again, take some chips off the table, have some powder, remain patient, wait for these times to come around again. Again, they don't come around that often, guys. When you see markets down this bad. All right, let's talk about some deep end stuff. Aoki's had some massive updates recently. Nils is robot scouting out in Beijing. Of course he is. That guy is a hustler. He's grinding all the time. Financing for 500 store robots. They had a European Fortune 500 company visit their office in Hong Kong. They are paying the community for doing the voice data. They're trying to collect voice data for things that you might ask a robot or an employee at the grocery store so they can train the robots. So that's been pretty cool. They said December's crunch time. It's always crunch time for these guys. They're always crushing it. So very exciting stuff. They're working on getting a big contract signed. They said hopefully by December 17th. So it's a couple days old. But man, Aoki continuing to crush it as always. Let's look at some of the compute stuff going on. We have IONET and their CEO talking about the GPU demand is outpacing supply. Here's a little article here about that. We have a similar theme here with Akash Network, talking about how new leases increased 42% quarter over quarter. So they're seeing a lot of growth in demand. Masari put out a report on them. I highly encourage you all to watch this Deep End Coffee Hour that I did with Havelo, with Neil from Havelo. And we got into a lot of that. It was really focused on GPUs and those different projects in the deep end space, talking about AI data centers being built out, how there's going to be a shortage of compute, the electric grid problems we're facing, amongst other things. So highly encourage you all to check that out. I think there's some serious hidden gems in there as well. That been beat down pretty bad. Let's see here. Ex Machina announced a partnership here with Virtual's protocol. So the big thing there is this is going to be your last chance in 19 days, in 19 and a half days, to get access to this project before their TGE. So they launch this in conjunction with Virtuals. You'll be able to swap either USDC or Virtual on base into the Deus token. Minimum is $30. Guys, this project I think is going to go absolutely ballistic. I actually interviewed the CEO Mauricio this morning, so I'm going to edit that over the weekend and get that thing posted. But what they're doing is insane. Actually, they are investing in all the top robotics companies out there. They're in 1X, they're in Figure, all of these that are going to be household names. You can see their investments right now. I mean, the one in Apptronics already up over 100%. There's rumblings right now that 1X is about to raise more capital at about double the valuation that they invested in. So if that does come to fruition, I mean, this $800,000 investment is going to be worth 1.6. It's roughly double of what they invested in it. They've got a few others that are on their radar right now. Yet Nura, which is an up and coming massive robotics manufacturer. There's a lot of people that are speaking very highly of this company. So that's probably the next one they're going to be adding. And then they have this Sunday and this Memo robot. So it does tasks in the home. It's trained using this little hand tool here. So another up and coming one. It's pretty crazy, listening to and speaking with Mauricio about everything they're working on. They are focusing on the full stack here. So you've got the humanoid robotics companies, the physical AI stack. I didn't realize this, but a lot of the different components, the actuators are basically the muscles of the robot that allows it to do its movements and do its hand motions and those sorts of things. A lot of the components that go into these robots are manufactured by a couple of entities that do manufacturing for multiple different robotics manufacturers. So they're looking at not only getting into the humanoid companies, but also getting into the full stack, of the components manufacturers. They're looking at different crypto projects like your Aukis, like your GeoNets, OpenMind's another one, and investing in those, as well as the intelligence layer. So there's just so many places to invest in this. And you need to be an accredited investor generally to get into these investments. You have to have pretty deep pockets for one. And then you still have to be able to get in with them. So they are removing that barrier so that anyone, you saw it there, $30 minimum investment, anyone can basically crowdsource and get into these investments you wouldn't be able to otherwise. So pretty freaking awesome stuff there. And I will say, check out their blog. If you want to be up to date on what's going on in the robotics, guys, like this is a wealth of knowledge in here. Even if you don't even invest in Ex Machina, like the info they have here, they have all the updated news on what's happening in robotics. And to me, this is going to be the next AI sector where the cash flow is rolling. You're already starting to see it, but the money is flowing into robotics, and it's actually crazy. So that's one that needs to be on your radar. They haven't announced an exact date on their TGE, but they just pass the pre-work for their TGE. So it is coming, guys. This was an announcement by Wingbits. Said India just announced plans to install 50 new airports by 2030, or build 50 new airports by 2030. They currently have 157 operational airports. So that's a pretty substantial increase. They're working with Daba Networks, so they are already deploying all across India. So Wingbit's making big moves. Obviously, their TGE got pushed out as well. Kind of a theme right now with the market conditions where they are. Daba up to just under 74,000 hotspots deployed now. They are continuing to add LCOs and expand. I had a really great space with their CEO a few weeks ago that's worth listening to. He shared some pretty serious alpha there. So Daba absolutely crushing it. So this is an interesting announcement from Peak. I don't cover Peak a lot, but they had run their Kaido rewards. And I think we're going to see more and more projects kind of move away from this, where they give token rewards for people to post, and the social engagement you get from that, I just don't see that it's really going to add value. And if anything, you probably just create sellers of your project that aren't aligned with what you're trying to build. So I think you're going to see more and more projects kind of move away from these campaigns and more towards organic exposure, which makes sense. I'll give it to Peak. Like, they're a really good marketing group. No doubt about it. And Ex Machina built on Peak. They're also on Base, obviously, but their CEO worked at Peak prior. And lastly, before I leave you guys, the Mosari report is out. So I'm going to be reading through that over the next week. There's an emphasis here on DePi, decentralized physical AI. You'll notice a lot of the projects that we've been positioning into, 375 AI, for example, right? Rover, HiveMapper, and Demo are in there. From this point, where we are in the projects, I would say I'm more bullish on Rover and 375 AI based on they're newer for one, but lower market cap. You got GeoNet in there, Aoki's in there, Ex Machina, right? Some of the other ones that I'll look to probably get on and cover. You have Prismax, you have BitRobot, OpenMine. So these all have some pretty big investors, but I think they have a chance to be very successful. Also, the CEO of Ex Machina is a big fan of those three, right? So this to me is, where I've really been repositioning myself. And I thought it was interesting. There was a video from Arthur Hayes that came out. I saw it today. It might have been out longer, but he was basically saying, like, everyone that's bitching about there not being an alt season, he's like, there's always an alt season somewhere. He's like Zcash, right? He named, there's a number of projects that really did go off. He's like, you got to position into where money is going to go, not where it's been. And that is very true. And we saw HiveMapper, we saw Demo run hard in the spring of 2024. And not to say that we couldn't see that again. I think that they could bounce back, but I think it's about positioning in where things are going to be. And to me, the physical AI, robotics, in data collection for the robotics scene is going to be absolutely massive. And that's why, again, I have really rebalanced my portfolio into 375 AI, Rover, right, GeoNet, Aoki, Ex Machina. Like, those are the ones that I think can go absolutely bananas. Joe says robotics is a scam. Well, you could start by spelling it correctly. But Joe, I know, actually has been looking into robotics investments for Mr. Deep and Hater. I believe Joe has been looking at placing some money in some of these robotics plays. I think it's a smart play, man. Obviously, you need to know what's best for you and your risk tolerance. And guys, we don't have a crystal ball here. We don't know when things are going to turn around. But I'll say this much. Even if it's just doing the research and educating yourself on these projects right now and maybe not getting positions in them and waiting for the market to turn around, I think that is a good investment in yourself as well. For me, I've been dollar cost averaging into extreme fear. Looking historically, that's been the best time to do it. Of course, you have to have patience, though. The other play would be to wait to see positive momentum because, we could be waiting for a while. Who knows? I think that things are lining up, that things will turn around in 2026. I think there's a good case to be made there. But regardless, whether or not it's investing now or doing the research to know where you want to invest when things turn around, I think planting those seeds today will be very well worth it. And looking back, you'll thank yourself for it. So I commend you all for being here when no one else is here, when everyone's pessimistic as hell, when the markets have been so red. I think it will pay off in the future. So I will leave you all with that. With all that said, you all have a fantastic weekend. I'm going to be in St. Louis. I won't be on my normal setup over the coming weeks. I'm probably going back for like a couple weeks. So I will be on my other setup, but I'll still be here. I'll still be covering the things that matter, the news of the day, the macro, the crypto, the deep end. Appreciate you all. Have a fantastic evening. See y'all.